When it comes to reviewing the various bank options that your bond originator has secured on your behalf, it is important to not only choose the best interest rate as the bank of choice for your home loan. And the reason is purely because there are a few conditions that set one bank apart from the next. And that's what I'd like to just share with you over the years in reviewing bond grants on behalf of my clients. These are some highlight facts that should go hand in hand with your decision on which bank offer to ultimately accept. And I'd like to start with Investec. So I'm going to go ahead and just read a condition, and then I will share what the further thoughts are on this, or what it actually means, because a lot of this is a little bit intimidating. And because I've been able to review it over time and really get extensive sit-downs with the various banks that we work with, they've been able to actually elaborate and explain these conditions in depth. And so Investec is the first option I'd like to share on their grant. They specify Investec has agreed that 5,750 Rand of the principal debt shall be available exclusively for payment of any inspection costs incurred by or on behalf of the borrower for any valuation of the property to be mortgaged, which is required by Investec. Right, and I'd like to just unpack that a little bit. The 5,750 Rand fee is, yes, a valuation fee that you have to agree upfront to have that paid towards your valuation and inspection costs. However, what many people don't realize is that this is only put in place if there's a physical inspection involved. So at the moment, any properties that are less than 5 million Rand, just in general, the banks don't necessarily conduct a physical valuation. And, we know just across the board, on average, those are pricing, in terms of the housing pricing market, that's the average price that we're looking at. So chances are you're not going to need to forego this 5,750 Rand for a physical inspection. And when that happens, it's a fee that Investec actually makes available on your access bond facility, which you can then utilize towards payment of your fees or just some touch-ups on the property that you're purchasing. Quite a nice feature that Investec has made available just exclusively on their product offering, and something just to look into when reviewing options that include Investec's approvals. Then we have FNB. They have what you call a future use amount. This amount may only be applied for 6 months after the bond has registered. This rule will not apply for solar loan applications, and the application will be subject to the lender's credit assessment criteria. So, and this is equal to 20% of the capital principal debt. So what this is it's a value of 20% of your home loan that you've taken out and been approved for, that's added to your original principal debt as a sort of an additional amount that you can access as the purchaser and borrower of this property, and you can access that as a further loan to renovate your property or consolidate debt. It's used for various reasons, apart from the fact for solar installations. But yes, it is something that you don't pay for, which is quite a unique value-added benefit on the FNB home loan offering. Then we have Nedbank. For existing Nedbank bondholders, if you are selling an existing property and replacing it with a new Nedbank home loan facility. So bear in mind the existing property is currently bonded with Nedbank, and you're replacing the new one with a new Nedbank home loan facility. There is a conditional benefit where Nedbank would waive the attorney cancellation fees, as well as the 90 days notice required prior to you settling the initial loan. So this is actually quite a really attractive option, especially if you're looking to sell with subject to buying the new one, because there's a lot of time involved with you having to, find the buyer for your existing property, that process to be administrated, and then for that to link up with your sale. Chances are that the seller of your property purchase is not willing to wait a full 90 days. And transfer processes are so efficient lately that, people are registering their home loans within a month of the bond being approved. So there are sellers at the moment where, time is money. They're going to go for the option where they don't really want to have a subject to sale condition on their purchase. And if you are a Nedbank client, this is such a nice benefit whereby you don't have to give them the 3 months notice or the 90 days notice in order to settle the existing loan and then take out the new replacement home loan. So that's a really, really attractive feature for existing Nedbank clients. Then we have Absa Bank, and this is something that I feel is so integral to the process for first-time buyers, because what it does is it gives you assurance as a first-time buyer that the banks are really looking out for you in terms of making sure that you are fully aware of what your responsibilities are as a first-time buyer and how things actually will work and what the steps are, etc., etc. Borrower's education certificate is to be provided before registration. This is an online homeowners workshop. Okay, so it's applicable to all first-time buyers taking up an approval with Absa Bank. And your attendance on this workshop is mandatory, and they offer several online video call sessions that are scheduled for attendance, which outlines your basic responsibilities as the mortgager and your entitlements to information on your home loan. So, for example, bond statements, home loan statements, contact numbers that you can reach out to in the event of perhaps a claim or for insurance on the property, things like that, pertinent information for a first-time buyer that is not always covered when you go in and sign for your home loan agreement with the bank's attorneys. So this is really something that benefits the first-time home buyer market. And then we have Standard Bank, last but not least. They have what you call a tiered interest rate structure. It's a unique weighted average interest rate, and it's tiered based on the additional loan amounts borrowed. For example, the original loan applied for when purchasing the property is the biggest principal debt, right? That's the majority chunk of your loan. And then a rate is then applied at that time. Once you top up and refinance that facility, Standard Bank will now apply a weighted average, which is 9 times out of 10 a lower rate concession to the smaller value applied for, but they would then weight that lower concession, average that weighted rate concession over the entire facility. So for example, if you received 1% below prime on your original home loan value, and a year down the line, 2 years down the line, you wish to top that facility up and refinance your original loan amount with an additional value, a new lower interest rate is applied to that additional, call it 100,000 Rand, and then they add the two rates together to average out the entire facility at a lower concession for you. So that's quite something unique, and it also gives you assurance as the borrower and as the home loan applicant that when choosing a Standard Bank option, chances are you might foresee yourself refinancing this facility down the line, and knowing this information could make you feel more assured and comfortable in knowing that when I do approach the banks at a later stage, I will be considered for a lower interest rate. It's not like, oh my goodness, I'm going to forfeit this amazing interest rate that I received. It doesn't work like that with the Standard Bank option. So that's quite nice to know. Thank you so much for listening.